Welcome, Auvorians. Steve Vetterl. Today's the 26th of September. My, how the month has flown. My name is Steve Vetterl. I am the CMA of the firm, also the risk manager. If we could do me a favor, please, in the chat window, make sure we can have a sound and video check. You guys should see my risk disclosure screen. I'd like to welcome all of our Auvorians. There's a lot of subscribers coming on board. We have a huge launch, as you guys may know, for October 17th with a number of softwares. Get everything up and all ramped up and lots of fun and some just ridiculously cool stuff to come down the pike. Also have a couple pieces of news myself. Let's go through the risk disclosure. Trading the foreign exchange market carries high risk. May not be suitable for all investors. Trading on margin and utilizing leverage can carry an even higher level of risk. It can lead to a complete loss of investment funds. So before deciding to trade the foreign exchange market or use any of our software alert products, you should carefully and diligently consider your personal objectives, level of experience, risk tolerance. Can you afford to lose the money? Do keep in mind Auvoria Prime as an organization, our company does not have any recommended settings. So if you're sharing any results or any of my FX books, please do not use the term company recommended settings. These settings come from the developers, myself, other team leaders, beta testers, R&D guys. Auvoria Prime does not have any recommended settings. We're not a financial advisory firm. We just license software. You can use it at your own risk and discretion. It does come with default settings, which can be customized if you wish. We have nothing to do with a brokerage account. We don't solicit or take investments. We don't recommend any brokers. You can find tons of great brokers out there, in my opinion, from your up and down line folks. We just license software. We have a tremendous amount of education in the back office. I highly suggest taking a look at it. Let's move into the Forex Factory calendar for the week. I'll go through kind of what I saw and share some insights here. Switch the screen over. You should now see my Forex Factory screen. Do keep in mind that you always want to click on this date and look for the week forward, September 27th to October 3rd. Do keep in mind, which seems quite sporadic to me, but there's a lot of bank holidays from a China perspective next week. There's almost 3 days, which looks like it should be 4 days, of a bank holiday for CNY, which is the China National Bank. There is typically less volatility associated with certain large countries that have bank holidays. Why? Because maybe there's less participants in there mucking things up, right? Or throwing in some crazy trades or putting a lot of pressure in one particular area. Also note that next week is the big non-farm. You hear this a lot. It's always Friday. It's always 8:30 a.m. That is East Coast time. You're looking obviously at times here that are West Coast times. Sometimes I forget to switch it. So if you're looking at the notes in the back office and you see that you're like, hey, what happened to all these times? They look like they're 3 hours earlier. It's probably because knucklehead me forgot to switch them 3 hours and now they're showing Pacific time. But in any case, the average hourly earnings, and you can always just go up to the window here and just switch them. But essentially it's coming out Friday. Probably wouldn't have any systems on Friday. Probably wouldn't be accepting any trades. If you have Alexander on Friday morning, it could be very treacherous, as it typically is. Do keep in mind ISM, as well as Christine Lagarde is speaking. She is the European Central Bank president. She is a very smart individual. So I always try and tune into what she has to say. She used to run a number of different other organizations, including the International Monetary Fund. So if you get a chance to listen to her speak, and I'm not sure really what she's talking about. I'm taking a closer look. Looks like it's an introductory statement or for some sort of economic committee to, it's like in Brussels, European Union type stuff, I guess. So it'll be interesting actually what she says, because she, along with the Bank of Japan, Bank of England, Bank of Canada, have mostly echoed the same thing that our Federal Reserve Bank, Jerome Powell and company, have said. And I think it's important from the currency standpoint to not only know the news stories, not necessarily have to do a deeper dive into them, but there certainly could be some issues if the wrong thing is said in this about Brexit, right? So anybody out there trading GBP related measures, this is something I would be highly on alert for. Maybe take a closer look at what is the range of time that she's testifying and or taking Q&A, and maybe be a little less interested in taking trades if they're electronically done for you in Einstein. You can always turn off the trading, as I showed last week on my Telegram channel. I have very detailed notes into how to turn off, with certain trades on, or you could just completely shut down by clicking the auto trading button at the top of the MT4 platform to turn it off. So those are my thoughts in this week. Developers are running. I am running. I was not running last week. Okay, so some of our accounts, we had a pretty crazy break. Here's just a quick look at S&P 500. I know a lot of you guys out there in equity land have stocks or funds or 401k related investments. So I think it's important to understand what's going on here. I added a couple of new lines. Okay, so purple's the 100-day MA, green is 200-day, red 50-day. Okay, these are all moving averages. Just help us understand where a confluence is, which is nothing more than an amalgamation of factors that get together in a particular area that can cause support or resistance. But note how the power of the green line and or the 100-day moving average pounced the S&P back up into a range. We've had over 10% correction. So that's kind of where we are here. We're holding here for those that are tremendously long in equities and 401ks and so forth, as I am with clients looking for a bounce. So let's take a look at the dollar. I think to the surprise of some, and I've done this the same, you can see these colors up here, 250 and 100. But we have broken above, which was arguably a pretty significant consolidation in the dollar. I think that in the long term, we may see this turn back down, but when there is concerns over, other countries having problems, a restart of COVID or a second wave or third wave, if you will, affecting economies, again, for the very short term, the market is going to come back, and dollar's going to be a safe haven. And that's what you saw for most of last week. Okay. So the problem with this is that when you begin to get into a trend, which arguably is 5 days old at this point, remember we're looking at a daily chart. Each of these candles represents 1 day. We've begun to move up here, broken out of that. It's always tough in a martingale strategy when you're trending up, okay, from a daily perspective or trending down. I think the strategy does much better, which we've certainly seen over the last couple of months when you're sort of ping-ponging between high and low levels, support and resistance, which essentially was right in the 93.72 area. We've broken out. Again, for a lot of the new folks, don't read too deep into this. Let your heart not be troubled. I don't expect you guys to understand technical analysis. I just walked through this with you as far as my thinking on the weekend, because I want my thinking to become your thinking when you look at these charts. So this is tradingview.com. It's actually a very simple system. Anybody can chart this. I have gotten my now 12-year-old son, Evan, into understanding charts. We're starting to take a look at it, and my hope is in 4 or 5 years, this kid is going to be a technical master as far as understanding charts, much, much earlier than I ever was. I was too busy messing around when I was a kid with BMX bikes and skateboarding ramps. So, what else I want to note? Okay, so when we broke above the red line, essentially the 50-day here, you can see the color codes on the left. We broke above this. We had a bit more of a push. That was kind of my concern that, along with a lot of events last week related to Federal Reserve banks and speaking, a lot of times if I can't wrap my head around, I think it's going to be a volatile week, I'm just not going to trade. had a lot of client meetings and a lot of other stuff related to the Auvoria launch coming in the middle of October. It took up a lot of my time last week, so I just decided I had it turned off. Let's take a look at GBP USD. And again, the Q&A window is open. So if you guys have any questions related to anything, I think I may open up a poll. Let me see if I can. And problem with these damn polls is you have to launch these things, I think, before you start Zoom. So, because I was more interested in who did not trade last week. So if you guys could put in the chat window, not the Q&A, but the chat window, let me know if you guys, so for those that traded last week and did well, Einstein, Alexander, Iris, in whatever form, put in a number one. For those that didn't trade last week and maybe save some face, put in a number two, which can kind of serve as sort of like a little poll. We can all see, generically what the numbers were. But I'll put in a poll. Hey, Case, let's go into GBP real quick. Now, I've begun to put these moving averages on, and in the case of notice that the purple line, which is the 100 MA, and the 200 are converging, okay? So I think that's the reason, along with maybe even less information on Brexit last couple of days. I think that's probably the reasons that we've paused. Because notice we had 3 doji candles in a row. And see if I can make this a little larger for you guys to see. Hopefully you can see this is 3 doji candles in a row. And that's an indecision type of thing. So again, what does that mean when I'm trading, right? Hey, Steve, what does this mean as far as us trading? It just means that right now we're pausing. For those that maybe were on the wrong side of this GBP USD type trade, essentially a type of system where it kept taking longs, you're in drawdown in that type of situation. So again, when we broke under this line, I expected us to have a pretty protracted move. Not this was exacerbated by moves in terms of the market sniffing out any potential problems with Brexit and trade deals and stuff like that. But notice we came right back up to the support line that we'd crashed through and now became resistance. And we went right back down to these other areas. The types of things you want to be on alert for if you're accepting manual trades in Alexander through this period of time is that, hey, we came up against what was support, which is now resistance, also happens to be the 50 MA line. Notice how we start to get confluence, right? Maybe I don't want to accept any buys, right? So during this period of time, maybe it would just be statistically more win rate significant to accept sells only. The problem with me throwing that advice out to the general public is that I still think, even though it seems pretty straightforward looking at it on a chart, it can be kind of confusing if you guys haven't looked at this stuff from sort of a macro perspective. So, and maybe it's a fault of me trying to take you guys down a deeper dive in technical analysis, but I've gotten a lot of feedback from people saying they love it. It's great. You're staying real simple. We're not getting too deep. Yes, we've added a couple lines to the chart, as I told you guys I would do. Because I feel that many of you are ready for a little bit of a deeper dive beyond just normal support and resistance as far as candlestick analysis, and we can bring in moving averages. So that's why I decided to do it. So where do we go from here? That's the tough call. So we're at, in my opinion, a cup with handle breakout, and we're back down near the support level. Not only did we break out from this somewhat of a sloppy cup of handle, but it's usually a pretty good pattern to break. Now we're back down around support. What's that mean? That means if we go into next week and you are trading, you are accepting trades, we're sitting at this level, it probably is not a bad idea to accept buy orders coming in at this point, right? But if we break this level, there's no support all the way down here, like multi thousands of pips lower. Okay. So I would expect us to see the 23 area. I would not be accepting any buys on the way down, at least initially, first couple of days of a break, right? So that's just me. I think statistically, you have a much more significant win rate if you're not, fighting the freight train, as I often talk about. Stepping in front of the train is very difficult to do unless you are an expert trader and you can manage risk. So just keep it simple. We break this line. Essentially, it's right in it's about 40 pips essentially in here, 2,700 to the 2,740 area, big area of support. Obviously, all bets are off the table. If anything Lagarde says about trade deals not going smoothly or stuff blowing up related to that, we're going down on the pound. Okay. Now, also, maybe they get their act together. Maybe some of these trade deals start to shape up and things are looking better for a smooth exit from the EU, right? More than likely, this thing's going back up because we're some pretty decent support right now. That's pound. So we've gone through the euro. We've gone through the dollar, the pound. Let's talk a little bit about the euro. So it's kind of the same strategy. The problem with this right now, I'll show you guys the bigger picture here. So we broke cup and handle, perfect pattern, ripped up into an area where long term is big resistance up here. So we spent some time consolidating on it. Obviously, the euro has decided to go down. Why? Because the dollar's gotten stronger. There's some other factors, but it's really just as simple as that. Looking at, I don't have as much insight, if you will, other than this area right here, 1450-ish area. It's more of a magnet if we continue down. Why? It's the point where we broke out from this pattern. Also just happens to be the 100 MA. So there's a little bit of confluence in here that could support us. So again, if we continue to see strength in dollar, leading to weakness in euro and other big majors, I'm less apt to be taking buy orders until these things had a significant move. I'm cool with taking shorts on a big pullback, right? So let's say we stretch back up to 17, which, essentially is about 70 pips higher than this. Just spread this out a little for you guys. Right? So you got that. We get back up towards this area, which has been almost an even 1700 area perfectly. You guys have a more interest, I guess I should say, in taking shorts up there because we've essentially pushed all the way back. That's kind of a distance, but we've been traveling some pretty decent distances in the course of each one of these candles that represents one day. So that's kind of my advice there. Again, this may be over a lot of people's heads. I understand that, but I think it's my duty as a risk manager to get you guys a little more in tune. Do understand this for those that have not heard me say this 100 million other times. We have other softwares that are being launched, Variable and others, that do require considerably less attention. There's not as much adjustments that need to be made. Some of the other new softwares coming out are martingale-based strategies with stuff that protects, a sequence of 6-7 levels deep, really taking the rubber band stretched. So there's not as much maintenance involved. Doesn't mean that you just forget about the software because, again, that's not proper risk management. That's not part of any solid trading plan. So a decent trading plan involves always paying attention to what's going on in the markets, even if it's just very briefly, 20, 25 minutes Saturday morning with me and or Tuesday or watching the recordings, at a bare minimum, you should be doing that. You may not understand all this, but I can promise you over time, especially if you go through a lot of the Forex Basics course in the back office, this stuff is going to become clockwork for you guys. So you'll be able to look at this and have just a basic understanding standing on your head. All right. What else do I want to say about euro? Do note, by the way, this is gold. Precious metals aren't necessarily leading around. It really is the dollar that's leading the world around right here, in my opinion, as far as both equities and currency land. But precious metals playing a little bit of a role. You can see we've broken under that, but we're holding these areas. Not too much of a move. Looking at other stuff, I think that's important. This is the USD JPY. Notice how the red 50 MA line has been holding this thing on pullbacks all the way to it, right? It's almost been perfect. We come back up to a declining 50-day moving average line. It's been a great place to take a short. So now that I've brought this in, it's maybe making it a little clearer to some folks that are new to the technical analysis game with Alexander accepting trades and maybe wanting to do, some discretionary accepting of some trades and not accepting of others. This line has been almost like clockwork on shorts. Every time I got back up to this line, I would have been accepting shorts. Now, this certainly could wear out its welcome depending on what goes on. So that's not my advice going forward in perpetuity, but it certainly shows you why you want to bring different pieces of technical analysis onto a chart to help you understand why things are reacting the way that they are. Take a look at the Euro JPY. I have less clarity with this currency, mostly because I currently hate it. So I choose not to pay a lot of attention to it, but you can see where had essentially two dojis last week. These are indecision candles, meaning the market hasn't really, for this particular pair, the analysis from my standpoint is a lot murkier. Why? One, I hate it. Two, it has not acted well at all in the last year. I don't spend a lot of time on it. I understand you guys, if you wanted to break from our earlier advice in a three-ring diversified currency pair trade ring, if you took it out, especially based on some of David May's analysis, do keep in mind in my notes this week, I will in the back office have now a link to David's presentation for those of you that have not seen it on the alternative settings. Was on the 12th of September. Okay. So you can go to our big, actually you can go to my Telegram channel and to the, where is it? By the way, for the question I got on that, it was September 12th, but I posted a link in the notes. And we're going to be, for our Australian colleagues, we're going to be posting this stuff now, trying very early Sunday morning. So Bill Wynn and the team will get these my videos edited. I don't know if there's much to edit. Maybe they want to edit out some of my bad jokes. But once they get them produced, we're going to try and get them up on the back office earlier, along with my notes, which will have a link in there to the VMO channel, which is also in the regular part of the back office for that question. So the first question I get, so it's an EJ question is the first one I get. Where do you see the support? I see it right down here. Honestly, guys, I'm not providing a lot of advice here for all the reasons many of you know. Next question. I think the USD will continue its move down. I'm in a buy sequence. So this is the problem I have when something breaks from a fairly decent amount of time spent ping-ponging around between tight support and resistance levels. These are the black lines we've been ping-ponging around, and then it breaks. I'm just not interested in buying until we get to some point much lower. That answers your question. So we could have a 1,000 pip move on this damn currency before we actually hit support. So just keep that in mind. This is where martingales, I'm just not a lover, guys. They break. They're not trend chasers. Best thing to do in any trend is always to buy the pullback, whether it's an advance higher or a decline lower. All right. Everybody pay attention to the screen. If you are not, let me show you something cool. Okay. Um, as many of you know, I do not um, take many offers from individuals. It's rare. Been asked to do a lot of stuff, talk about a lot of software, come on all kinds of podcasts, and I turn most of the stuff down because the people that run those organizations, it's junk. Okay. Now, Casey's a different story. Casey has asked me to be on his podcast. I think it's going to be our shoot is October 7th, if I'm not mistaken. October 9th, forget something like that. So then it'll be produced. It's actually going to be live. I'll have more details for you guys as we get closer to it. It's still basically 2 weeks away. But Casey, this guy is the man, I'll tell you. Guy's an Army vet from, he was in the U.S. Army. The guy's a father of 9 children. Get that. He is just a super guy that has become a tremendous success in the equities trading and Forex space. He's built a number of programs. He's been, a member of some of the stuff that I've won awards from and with the different organizations out there, especially Seeking Alpha. This is a very good organization. If you're not, I'm showing this and I'm posting this for you guys because I want you to, if you need to have the link to Casey's podcast, it's right here. It's actually really good. So it's called How to Trade It Podcast. We're going to be talking about it. Cool thing is I'll throw a big shout out to Auvoria, get a chance to talk about a little bit what we do here that's much different than the industry. So I think with the over 50,000 listeners to his podcast, it's going to get a tremendous amount of exposure to Auvoria. So what was the question asked? The question that was asked, where can I hear the various news announcements to speak about? I'm not sure what your question is to speak about. Is that, are you talking about the podcast here or my Saturday or Tuesday calls? So you might want to clarify that question. Hey guys, that is the announcement from myself. If I don't have any other questions, half an hour in, I suggest we all get in touch with whoever. As you guys know, I am not as much an affiliate marketer, but we have had tremendous success getting our team placed, and we will be launching hopefully a fairly significant team on the affiliate side of the business. So if you guys have not listened to the corporate call, I would certainly do so. Last couple of Thursdays, Sal has provided some tremendous insight. I would really get up to speed because there's going to be very few opportunities that you'll ever have in your life to pitch, if you will, to the folks not involved about the big launch we have coming up. Okay. I would just set it up like a bicentennial event right here. That's kind of how we're doing it. So for those that have any questions on anything, again, @Vetteral, put this in the window, @AuvoriaPrime.com. Why can I not type today? There we go. That is my email. If you send me an email, please hook up your MyFX book fully verified. I know it's a pain in the butt, but please do it. That way I can see what's going on in your accounts. And do make sure you've paid attention to our high volatility settings and or David's volatility settings. That will give you guys some good exposure. But, do get pumped, guys. We've got some killer software coming down the road. It has done really well in the last couple of months and over the last year that we've been tracking it intensely. I've taken a much closer look at a lot of this stuff, and we got some good things to come. So I wish everybody the best. If you have any questions, send me an email. Have a great week. May the trades be with you.